My name is Nicholas Aman. I am the Vice President of Business Development at FÉRIQUE. I'm very happy that you're here with us today. I would like to say hello to Mahamat Amat, who is one of the team lead and senior mortgage advisor at Nesto. Mahamat, thank you for being with us.
Thank you.
And we also have from our team, Shelly Pocheron-McGill, who's one of our advisors here. So thank you for being with us, Shelly.
Thank you.
I would like to take a few minutes to explain to you who we are and what we do. So FÉRIQUE is a non-for-profit that's dedicated to the engineering community in Quebec. We have $5.1 billion under management as of December 31st, close to 23,600 clients, and probably the number that we're most proud of is 97% satisfaction rate. Who do we serve as clients? We have, of course, engineers. So if you are a member of l'Ordre des ingénieurs du Québec or l'Ordre des ingénieurs forestiers du Québec, anybody that is a graduate from an engineering school, anybody that is currently enrolled in their engineering school, could be at different university across the province, or if you are a family member of said person. So if you are, let's say, an engineer and you have a spouse, the spouse is eligible. If you have parents, grandparents, kids, grandkids, well, everybody's eligible, as well as brothers and sisters. What's also very interesting is if you are an engineer or an engineer graduate and you have a business, well, you can offer FÉRIQUE services to all of your employees through our group savings option as well. So you can actually enjoy the services that we provide to you, for your entire family, and for your business. FÉRIQUE also offers 18 funds and portfolios that we cater here. You see them on screen right now, though 2 of them are with sustainable development focused, the Global Sustainable Development Bond Fund and the Global Sustainable Development Equity Funds. All the other funds also follow ESG criteria with limited port, so we're able to help you out and give you the best advice on these different options. We were talking about first-time home buying saving accounts today, FHSA, but that's not the only account that you can have with FÉRIQUE. Could be a TFSA, an RRSP, a LIRA, RIF, LIF for disbursement, RESPs for kids, even investment accounts for businesses. So we have a variety of accounts that you can work with when you talk with us. So we were talking today about mortgages and FHSA. So I invite Mahamat because he's part of Nesto, one of our great partners that we've been dealing with for a few years now. And I'm going to pass you the puck so you can explain to people who is Nesto.
Perfect. Thank you so much, Nicola, for having me today. I really appreciate it. So Nesto, we are one of the larger virtual lender in Canada. We lend across Canada, basically. We have mortgage advisor, basically, across Canada. And we build our own underwriting platform so that help clients when it's coming to mortgage renewal, when it's coming to purchase, when it's coming to pre-approval, to make it very easy to them. And we focusing more on the client experience and also helping people choose the right product for them. So basically, our tool that we built, it help clients to navigate through the process very easy. They can get their approval within 72 hours if all the document and the condition is met. And also, you're always going to have someone during the process helping you through the process. Let's say that if you're really not a technology person, you're always going to have someone that go through with you how to structure your application, and how you can choose the product that is really fit for you. The difference between us and other lender is we are always going to focus on what is the right product for you and how we can quickly make a decision when it's coming to application.
So thank you again for participating in the webinar. And I'll discuss the mortgage referral program, the partnership that we have with Nesto. So I work closely with Mahamat by referring clients who are interested. Once their mortgage is coming up to renewal, I usually have the discussion with them and see if they're interested in doing business with Nesto. So it's always great to have a better rate. You always want to shop around for your mortgage rather than to go do something which is an automatic renewal with the mortgage that you have. And so Right now, with the partnership that we have with Nesto, is that you will receive 0.15% on the amount of your loan. And that's just the mortgage, right? That excludes a HELOC. I'm guessing that excludes a
Yes.
home. For those who don't know what a HELOC is, it's fine. It's a home buyer's line of credit, comes with the mortgage. So the 0.15% cashback, if you decide to do business with Nesto, doesn't include the HELOCs. That's correct, right?
Exactly, Shelley.
Perfect. And so yeah, so usually you can start shopping around for your mortgage. I would say 150 days before your mortgage comes up to term. So if you know your mortgage date, I always tell people put it on a calendar, put it in your phone as a notification that 150 days when that first starts up, you can start sort of looking and shopping around. Give FÉRIQUE a call as well. So I would highly recommend you guys call us when you can see that renewal start up. And myself or one of my colleagues can put you in contact with Mohammed by booking an appointment with them so that we can look at the fastest, so you can start the process the fastest way and also to have the best rate for you when you're shopping around. There we go. And then so back to the mortgage renewal.
Yeah, thank you, Shelley, for that. I really appreciate it. So yeah, 2026. So why 2026 is so important when it's coming to mortgage renewal is the biggest year when it's coming to renewal. Okay, and why is important 2026 is that Bank of Canada. They're maintaining the rate 2.25 last month. So that is a really great news for consumer and especially for people that seeking a mortgage, for people that they have a mortgage renewal, and also for people that are looking also for just pre-approval and they want to buy something for this year. And also at Nesto, we believe that the rate will maintain at 2.25 this year, and there will be maybe some rate drop by the end of the year, depending of Bank of Canada. Okay, why is so important for you this year when it's coming to renewal, when it's coming to purchase, when it's coming to other product and lending, especially on mortgage? Because almost like 60% of Canadians, they have to renew their mortgage this year. And because of that, it makes it really, especially for consumer, is really good for you because you will have a lot of option when it's coming to rate, when it's coming to product. So this is why it's so important today. If you have a mortgage renewal in 6 months, in 120 days, especially that the RRSP season is really now, give a call to your advisor at FÉRIQUE. They're going to book an appointment. You're going to sit down with us. We can go through to see what is the best product for you, and if that a fixed rate is better for you, or a variable rate is better for you. You have to understand that right now the variable rate is lower than the fixed rate. The reason why is because we had a chance to have Bank of Canada drop it a little bit last year. And for most of the clients, the variable rate is a really good product because it gives you an advantage of having something lower as of today, and then you can fix it whatever you want during the years, and you can choose the moment that you want to fix it. Let's say that if the fixed rate drop in 6 months, you can just go ahead and then fix it at that moment.
That's great, because we actually have a question regarding fixed and variable, and how do I make this decision between fixed and variable? I think for a lot of people, and you probably have more stats on that, I think a lot of people tend to go fixed versus variable, but we know that historically variable usually has historically been better.
Yes.
But people sometimes like that predictability, and I think for a lot of people it's that fear. So what are the main things to consider when we are up for renewal to decide which product? Because I know that's what you do a lot. You help people navigate that option. So what are the key factors we should look at?
Yeah. So usually we ask question, what is your goal, basically? If you have any intention of selling your home, if you have an intention of increasing your mortgage for the next few years, and then also looking on your financial need, basically. Mm-hmm. So if you're a person who really you want to pay your mortgage very fast, and then and then you're like you have those money sitting on your bank account, So basically, it's good to go with the variable rate because giving you right away a lowest rate than the fixed rate, you're going to save more money when it's coming to interest. And at the same time, you have like prepayment option up to 20%. You can just put that on your mortgage. So you're going to just pay your principal very fast.
Yeah.
And also, basically, the variable rate is you can just decide if you see that the rate is going up, you can just call and then fix it. And you don't have that option with a fixed rate because basically, yes, if you want to go with the fixed rate, as soon as that you choose a fixed rate, there's no option to go back and change that because you're going to pay a penalty when you do that.
All right.
Yeah.
Thank you.
When is the good time to talk about a mortgage renewal? When the good time to talk about a purchase? So for me, it's like every time that you have a mortgage that is the renewal date is in 6 months. This is a good time to sit down with your existing financial institution, and then to talk to your advisor at FÉRIQUE. Say, listen, my mortgage renewal is in 6 months. What I can do right now, and then what they're going to do is they're going to put you through their to nesto, and then we can sit down with you and see what is the rate at that moment. Sometimes because the rate that you're paying right now maybe is higher than what we can offer, and you can even break the contract, and then you can renew your mortgage in advance if you want. So there is a lot of option that we have that can help you choose your mortgage in advance. And when is the best time when it's coming to purchase? And I think you need to, if you have in mind that you want to buy a property, you have to start really early, saving money. Put your money on the side, and when you're coming to buying a property, you're ready at that moment. And then it's so important to start. If you know that if you have a project of buying a property in 1 year, it's good to start the pre-approval process. The pre-approval process is giving you an option to know exactly what is the maximum amount that you can qualify for, and then you know if you can afford to get that mortgage or not. So why is important also this year, the renewal is we always have almost like a 1 million of mortgage needs to be renewal this year. And like I mentioned, it's so good for you as a consumer because you have a lot of choice between those financial institutions because they know that the chunk of a mortgage need to be renewal this year. So you can have like a very good rate when it's coming to rate, and also when it's coming to product, you will have more option that their mortgage renewal is next year. So when is the earliest moment to start your discussion for a renewal? Basically 6 months in advance, okay? And when is the best time to hold the rate? 120 days in advance. Why 120 days? Like at nesto, we can hold the rate 120 days. And if the rate drop during that time, you're always going to get the lowest rate. If the rate increase, at least you're not going to be impacted by that.
The hike, yeah.
Exactly. So this is why it's so important to have a conversation with your advisor at FÉRIQUE if you have a mortgage renewal in 120 days.
So I guess anybody because usually people buy their house or renew sometimes in May, June, July. I think that's for a lot of people, that's where the peak is because a lot of people tend to go from renting to buying in their break. So I guess right now you're telling me that if I'm renewing this summer, now's the time to start my conversation. Even if it's June or July, now's the time to shop around, either with my institution, with you, anything like that.
Exactly, because you know that in Quebec, a lot of people, they have a mortgage renewal on July the 1st, than other province. And then especially in Quebec, we extend our rate hold until July 17. So basically, even today, if you're calling nesto and then we hold the rate for you, we can hold it up to July 17. That means that you have time to shop around, and at the same time, you have a rate that has been held for you.
Oh, that's really good. So I know exactly what to expect. That's my sort of worst case scenario, let's say. So I know exactly what I'm getting now from a renewal. I can shop around, compare, make sure everything makes sense.
Yeah.
And I'm good to go.
Exactly.
Awesome. One of the questions that we've had, and maybe we're going to talk about it, over the renewals is we had a question about, and you were talking about it, Shelley, earlier, home equity lines. Because a lot of people now have those products that are, I have a mortgage, I have a line of credit that's linked to my house. I assume now Nesto offers that product as well.
Yeah.
And so what are the conditions and how does it all work?
So basically, when it's coming to a line of credit like secured by your home, we call that HELOC. So the way it's going to work is we combine your mortgage and your line of the limit on your line of credit together. The maximum loan to value is 80% of your property value, and 80% of the property value, not your municipal evaluation, is more on the market value. Okay. And then the HELOC is so important, especially if you have a mortgage renewal that is coming this year. It's time to discuss with your advisor, see if maybe is a good idea to add that HELOC on your mortgage. Because if you have any renovation coming this year or next year, and especially if you have like maybe big expense that you want to do this year, could be just even for investment, I think it's really good to have that conversation. And then we have that HELOC. Basically, the HELOC is really, you're only paying on the interest that's been used. There is no monthly fee. There is no other fee. So it's absolutely just a line of credit that has been authorized, and then you can have it when you need it.
So my understanding is now that we're renewing, it's a good time to review all that.
Yeah.
Maybe my house has gained value. Maybe I have projects. So it's not just renewing rate for rate. It's maybe reviewing and saying what can I do or what's the best structure to do this. So it's not just the rate here. It's reviewing everything. Because if you're going to change institution, I have to go to the notary. Might as well review everything and make sure everything makes sense according to my products and projects.
Absolutely. That is a very good question, Nicolas. When it's coming to renewal, it's not just about the rate. So it's beyond a rate. It's a product that you're choosing. What type of product that you want? Are you looking for a product with a biggest option on lump sum? Are you looking for a product that is short-term, a product that you want to just have it just a few maybe months or a year, and then you want to pay it off? So this is why it's so important that not just go then click on an automatic renewal when it's coming to renew your mortgage. You need to have a conversation. You need to shop before you can renew your mortgage, because just doing automatic renewal is the worst scenario you can do, because you never know what other financial institution offering than what you have right now with your financial institution. So this is why it's so important to just shop and not just think about just rate.
All right.
Yeah. So we're going to talk about down payment. So we know that down payment is so important, not just for buying a home. Down payment could be for a lot of stuff, because down payment is help anyone to access to a property, okay? And at the same time, if you start your saving very early, that means when it's coming to do your pre-approval application, it's going to help you not just for the approval. It's going to help you even to see if you can get a property higher than what is usually your income with your income you can afford, because you can have an option to put more down payment, have a small mortgage amount, okay? And sometimes if let's say that your income is lower, but you have a lot of saving, we have some program that has helped you a lot, because we can use your income, your saving as an income to help you get that approval. So this is important to make sure that you have to start your saving very early stage, and then not start like last minute to when it's coming to down payment. So now that we're talking about down payment, and it's so important to save money, and especially we are on that season, I'm gonna leave my colleague Shelley to explain you why it's so important to save money when it's coming to buying a home.
Thank you so much. Thank you. So just to so now that we've covered everyone who has a home, and it's the time maybe for you guys to do the renewals, now we're going to just focus into people who don't have maybe their first home, who are planning to purchase a home in the future. So we're going to talk about the First Home Savings Account, the FHSA. So it was on the federal budget in 2022, and it was launched in April of 2023. Usually, you have a maximum amount per year of $8,000. So typically, I would tell people as soon as you are 18, because you have to be 18, one of the eligibility requirements is to have it 18, is to open that first home savings account right away. The contributions are tax deductible, just like an RRSP, but it also works like a tax-free savings account in the sense that you don't have to pay it back if you use it for the down payment for your house. So there's no repayment after like the home buyer's plan that you would normally have with the RRSP. Very, very simple. The first home savings account, if in very short words, it's almost like the TFSA and the RRSP had a baby. And this is the result of the FHSA as the first home savings account. So in terms of the eligibility requirements that I'm going to be talking about, you have to be between the ages of 18 to 71. You cannot have owned a principal residence during the year of the account opening or the previous years before. Super important when you guys are shopping around for mortgages, when you're looking at it. Also, who are you going to get mortgages? So look at the spouse, like the last year, during the year, sorry, of the account opening or for previous years as well. So just keep that in mind when you're there's a really good question on the website. You can see whether or not you qualify for an FHSA or not. And so this is the eligibility for the withdrawal. And you will be the main goal also of the first home savings account is to purchase a property that will become your principal residence. So unfortunately, people who have triplexes, quadruplexes, duplexes, or other types of homes, you really have to be, it has to be your principal residence for this first home savings account to be useful for you. And so it is what I say complementary to the RRSP and the TFSA. So it comes in and it complements the two other investment accounts and savings accounts that you have. The registered retirement savings plan, which was created first. Tax-free savings account was created in 2009. And so you can use all of them. You can use two of them together. You can use a combination of them depending on the liquidity that you have and the amount of money that you have saved up. But I always say start early. So again, I'm repeating it again, as soon as you're 18, put that money aside and try to get the maximum amount in those savings accounts based on your contribution rules.
I have a question for you,
Sure.
Shelley. I have a lot of questions sometimes with some clients. They're like, you know what, if I have a first time home buyer
First home savings account. Yeah, it doesn't roll off the tongue quite as well.
Basically, if they have it and they use it for their first time home, and then they sell that property, so they have to wait how long to be able to use it again? Do you have like a timeline, or like that doesn't matter? Like,
yeah. So usually it's you cannot have been in that home for the 4 preceding years. This was created specifically for first-time home buyers.
Okay.
So if you're looking at someone who's looking to purchase a second property that is not the principal residence, or another person who wants to sort of upgrade their current home,
yep.
You're probably better off, again, speak to an advisor. We will look at your situation. And we also have to take into consideration the spouse and the other people who are on the loan as well. But it's usually better to go the TFSA route or other types of routes with the FHSA. There is a 4-year period, but in that 4-year period as well, in the eligibility requirements, you could not have been in that home, or you cannot live in that home, right? Am I wrong on that one? Yeah.
So how the FHSA work, to answer your question, is usually when somebody purchases their house and they have their principal residence, it's rare that they're going to be a non-owner for like the next 4 years.
Yeah.
We've seen it. Let's say you work in Montreal, then you could decide to go work for a company up north, and they feed you and they board you for like 5 years. Okay, technically, but it's the very small amount of people that would have that. So there's questions that we usually have also between RRSPs and FHSA when it comes to divorce. Unfortunately, now a lot of people they live together, they're married, or and they divorce. So now they need to each buy a house, or they want to purchase or repurchase a portion of the current house that they own. First-time home buyer savings account cannot be used here. It doesn't work because you were the owner, you were there for the last years.
Yeah.
The only rule that applies is the home buyer's plan. So that you can. So if I want to take out money out of my RSP and to put that down payment at $60,000 that I'm out to put into that new house, I'm allowed because of the divorce. Okay. That being said, I have to make sure that my initial home buyer's plan, if I did one, is fully repaid.
Yeah.
So those are little details. So this is where like case by case scenario, and Shelley mentioned it, you always want to come back and talk to somebody. I understand there's a lot of fun stuff on the internet. There's all kinds of AI tools. Yeah. Come back to us. We'll be more than happy to look at it in detail.
Yeah, or even like you can go online, do your own research, do your own due diligence, but bring it into these questions. I have these questions or these following questions with your advisor, and then we'll be able to look at your scenario. But it's case by case scenario. But usually with the FHSA, at least from my understanding, is that it's done once you've made that purchase, once that withdrawal has been made. And fun fact, you have to close it once you've made that withdrawal for that person. Okay. So that's something that's really important. But there are other vehicles, tax-free savings account, RSP, registered education savings plan, non-registered accounts that can also be used for future down payments for future houses. So again, like we were talking, you want to make the best choice for your situation, and it's not a one-size-fits-all. You can combine, like I said before, FHSA and the home buyer's plan that's using your RSP. You can withdraw from your TFSA to contribute to your FHSA, and you can transfer your RSP to your FHSA. You have, from the time that the account is open, 15 years to use it. If in that 15 years you decide not to buy a house, that's fine. You can roll it over into your RSP. So there are a lot of things that you can do with this account that's been created, and just take advantage of that. And again, it's a lot of information. Speak to your advisor, and we'll be able to look at your scenario and choose what's the best option for you. So I will send it back here. Yeah. And
so what's important here, I want to point out, is we can look at different accounts, we can do our research. There's a big part of it that will come out to the advice, whether it's with somebody at Nesto, whether it's with somebody at FÉRIQUE. Our goal for us on our end is to assess your situation, make sure that we give you the best advice possible. I recommend different solutions that are working best. Certain times it is to do a home buyer's plan withdrawal, then putting some money in the first-time home buying saving account so that we can actually get that tax deduction. So there's all kinds of scenarios that we can play around with and make sure to optimize it as much as we can. So before we go to the questions, because we have a few, and thank you so much for asking your questions. If you do have some, please continue to send them over. We still have quite some time to answer a lot of questions, so please send them our way. If you have questions, how to reach Nesto, the easiest way is to go through us. You come to us, we'll be able to put you in contact with them, because remember that by going through FÉRIQUE, you will get that 0.15% return, so you can invest it in one of the accounts that you have with us. So if you need to talk to us, it's fairly easy. Monday to Thursday, 8 to 8, so 8 a.m. to 8 p.m., you can talk to somebody. Friday, 8 to 5. And we also have a special schedule right now. As you may know, it is the final stretch of the RRSP season. So the next 2 Saturdays, the 21st and the 28th, 8 to 4, we will be open. And next Friday, also the 27th, we'll do an 8 to 8. So we're extending the hours to make sure that you are able to reach us. If you need to call us, you can do so. If you want to email us, you can do so. If you want to chat with us, you can do so. We are so many ways that you can reach out to us. Our goal is to make sure that you're able to contact us whenever you want. If you want to meet somebody, we can do video conference. You have the QR code on screen. You can scan it and book an appointment. Our goal is to be able to answer any of your questions, whether it's RSP, retirement, in this case here, mortgages. So the first question that I have for you is from Ahmed. So thank you to whoever asked the question. Do you offer mortgages or products for a group purchase of a property, like an undivided property with several co-owners?
That is a very good question. No, we don't do that. And I think just a few lenders they do that in Quebec. It's only, I think it's Desjardins and National Bank.
Okay.
No, we don't do that. So we don't have that product.
Okay, super. So what is the minimum loan that we can do with Nesto? Is it, there's somebody here something about 250,000. Is that too low, too big? How does it work?
No, when it's coming to loan, when it's coming to mortgage, especially if you're a FÉRIQUE clients, we don't have a minimum mortgage. Okay, the very important thing is we want to sit down with you and offering you a product that is made you gold, not just like if you don't have like a mortgage of 250 and more, you're not going to deal with us. No, not at all. The way we work with FÉRIQUE is more on advice and also depending on your goal. So there's no minimum. Of course, if your mortgage is less than 100,000, sometime depending the rate that we're offering you and what you have with your financial institution, we can calculate it and see if it's worth it because you have to transfer your mortgage, you have to pay notary fee, if it's that worth it or not. But we don't have like a minimum mortgage.
Okay, perfect. Shelley, I think this one's for you. For the first-time home buyer savings account, is there a minimum amount of time the funds must be in the account before making use of them to purchase a property?
Nope.
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 24 hours, right? In and out.
In and out. It doesn't work like the RRSP where there's a minimum of 90 calendar days that it has to be in there for you to use it for the home buyer's plan. The FHSA, the first home savings account, you can put the money in, have it out in 24 hours and have it in for your down payment. There is no minimum, minimum time. Oh, they thought of it. They did a good job with that.
Wow. All right. So another question, does Nesto offer products other than mortgages with the property? Can we do loans linked to, let's say, a brokerage account or a non-registered account?
We don't do that. We don't do a loan that is secured by an investment.
Okay.
We don't do that.
All right. Awesome. Another question here. Does Nesto offer loans or does it only refer to financial institutions like a broker? Because I believe Nesto was a broker initially, and now you offer your own product.
Yes, we are a lender. Basically, we're not a brokerage. Okay. We do our own underwriting, our own processing, and our own funding. So basically, there's no other person involved or other financial institution involved on our product.
Right. Can we recuperate equity when we're transferring mortgages from one bank to another while doing the renewal?
Yeah, that is a good question. This is why when it's coming to renewal, you need to sit down and see if you need that equity taking out from your home, because this is why it's coming to, do I need to add a line of credit or do I need to just increase my mortgage? So yes, when it's coming to renewal, this is why you need to just sit down and see what product is good for you, not just a rate, because it's not just a rate. So you have to think about what is the best for you at that moment.
Okay. For projects that are slightly different than mortgages, like renovations, buying a car, school, is it best to put the amount on the mortgage or to take a home equity line where the rate is usually a bit higher?
That is a very good question. My answer to my clients is, when it's coming to adding debt to your mortgage or to your line of credit, depending what kind of debt that you have. Okay, if you have a car loan, if the car loan, a lot of car loan, the rate is lower than the line of credit. When it's coming to other debt, credit card, I know that it's higher because it's 19%, 20%. At that moment, is worth it to add it to your mortgage or to your line of credit. But always my question to client is, when it's coming to your financial need, you need to talk to your advisor first. Could be at FÉRIQUE. Sit down and see what kind of debt that is good for you to pay it off and which one is to keep it. And then, of course, we're going to work with you and see we can do a simulation and see if it's worth it to add which debts and which one is excluded from your financing.
And I want to do some mileage on that because I totally agree with you. Talking with us makes it a bit different. I'm going to tell you why. Some people will have a mortgage, they'll have a car payment, they'll have school loans, and that's fine. And they are able to manage having 3 or 4 different loans at the same time. Because sometimes the car loan is smaller and they have a promotion, or you have repayment plan with your school loans, and it works extremely well. Some people manage it very well, and other people having 3 or 4 payments is very complicated, and they rather consolidate because it's easier to manage.
Yep.
There's no right or wrong. Mathematically, there's always a right answer, but for certain people, it makes it just easier to manage one payment versus a lot of payments. So, like again, come back to see us and we'll be able to manage it all with you. The great thing is we have different tools that we use. We have Orchestral. People who don't know what Orchestral is, I will invite you to look at a webinar that we've done 2 weeks ago on the topic. It's a financial planning tool that we use here at FÉRIQUE, and we can simulate all kinds of different scenarios for you. So those scenarios we can manage, we can play around with, and then find you the best solution for that answer. What are the prepayment privileges that Nesto offers in terms of paying extra down on the principal?
That is a good question. We on our product could be a fixed rate or a variable rate. We have an option that you can use as a tool is up to 20% of your mortgage amount. I'm not talking about your mortgage balance. Is the mortgage initially transferred at Nesto? Let's say that your mortgage initially is 300. So is 20% of that 300 that you can put every day on your every month, sorry, not every day, every year on your mortgage, and then you also have an option to increase your mortgage payment by 20%. So because some people they prefer increasing the payment and then just putting a lump sum on their mortgage, so you can have that option as a tool. Yeah, it's 20%.
All right. Oh, this is fun. We are looking to purchase the first house for our son, to help our son purchase first house. How does it work to talk to somebody at Nesto? I know we understand that everything can be done online, but we're old school and we'd rather talk to somebody. I like that. So do you also refer to different notaries? Do you have also references for inspectors if that ever needs to be done? So Shelley, I may let you take it because I know you deal a lot with clients that want to get referred to Nesto. So maybe explain to them the process, how it all works to get in touch with you so we can do the pass after.
Yeah, absolutely. So if you are a parent looking to help your child buy and purchase their first home, again, talk to your financial advisor. You can donate or give money towards the down payment, but sometimes there's more of an impact in terms of there's a fiscal advantage in putting it in an FHSA, for example. And again, talk to your advisor. If you're a client at FÉRIQUE and your child's not, we can still have the conversation with Nesto. We can open the accounts for your children as well in order to help guide them in making the best decision based on purchasing a house. So you can always look at what is the best possible outcome given your current situation for that. And so you call us, you say, I want to purchase a house, or I want to help my son, my daughter, my child with a house purchase. We will get you into that conversation with Muhammad. Again, when I log and book the meetings, there are additional participants that can be there. And letting them know also that you will be maybe co-signing. It's possible in this with the housing prices and everything. It's very possible that you might be co-signing on a mortgage too, and then it'll be possible, and that's a discussion that you can further have with Muhammad.
Yeah, and also you can basically add your advisor from FÉRIQUE on the conversation. We can have like a meeting all together. At least we can see what is your need, and then we can help you to go through the process. If you're really not, you want to help directly, have a conversation with us, not just go on the website and then make and apply for mortgage. So yeah, we're here to help.
Absolutely.
Yeah.
Awesome. There was about some people was looking at a slide, and I think it went a bit quick for them. So they believe that we're looking at 5-year fixed rate. Could 5-year fixed rate be better than 3-year fixed rate? So because institutions don't want to have the same big renewal in 2031 of a lot of people renewing, are there different pricing, differently based so that we spread them further apart so that the institutions sort of win in there? Or what do you see when you're doing renewals right now? Are everybody looking for a 5-year rate? Are they looking for a 3-year rate because they don't know? What do you see usually when you work right now?
Usually, I will be honest with you. When it's coming to term, I always ask this question, depending on your goal. Okay, if you really want to go with something lower, I know that when bank pushing 3 years, we know that in 3 years rate will be more higher. Okay, this happen a lot. Okay, so this is why I was gonna have a conversation with clients. What is your goal? Are you really want to sell your home in 3 years, or you want to just have that 3 years fixed because you want to just renew that in 3 years, and you may be, thinking that the rate will be lower. So depending if really you want to sell your home in 3 years is a good product for you. At that moment, you can just take the 3 years and then you're going to sell it. There's no penalty. Okay. But if you just want to take the 3 years fixed because you think that you're going to end up in 3 years having a better rate, that is wrong. Because no one can predict the rate look like in 3 years. If someone telling you, well, in 3 years the rate will be better, they're lying. They're really lying to you. So my advice is always is, what is your goal and why you need that 3 years term versus 5 years term?
Perfect. And to add to that, there's a certain thing on a client where they have to know themselves, right?
Yeah.
Some people just want that locked in fixed rate 5-year.
Yeah.
They just don't want to think about it for the next 5 years. And
Yeah.
there's nothing wrong with that.
Absolutely.
And if that's what they
Absolutely.
want because they don't have other projects
Absolutely.
3 years' time, it's still perfect for them as well.
Absolutely.
All right. Can you please provide a bit more of an explanation of the 0.15% cashback that was mentioned in the beginning? What does it refer to?
Yes.
Okay. So let's give a very concrete example.
Yes. So if you are a client at FÉRIQUE, you are admissible to receive 0.15% cashback on the amount of the mortgage if you decide to go with nesto. So it's the amount of the mortgage. When the mortgage is dispersed, when everything is done, we get a notification on our end, on the back end, to let you know. And that 0.15%, you can take it and you can invest it, if you have the room, in your tax-free savings account, in a non-registered account at FÉRIQUE, in your RRSP if you want to do those contributions as well. So that's a little bit how the back end works for the 0.15%.
So if I decide to do the process, it goes through, it gets dispersed. I just disperse a $300,000 mortgage, 450, which is 15%, is given back to you, so you can actually reinvest it in your TFSA, RSP, non-registered, or anything like that.
Exactly. Yeah. And we call you. We're very good on that. When we get those in, we call you and we let you know that it has arrived. So definitely.
Right. And the reason why we're doing that is we have to understand that, as I mentioned earlier, FÉRIQUE or Service Investissement FÉRIQUE is a non-for-profit. So we want to make sure that we're able to give it back to our community, because we don't want to use it. We can't make profit. We have to be at zero at the end of the year. So that's how it all works. All right, I have another question here that I skipped, and I'm going to come back to it. Here we go. I have a home equity line that needs to be renewed this summer. Is a renewal different than for a mortgage? I have the impression that I'm stuck with my bank because the fees to do these changes seem to be very high.
Well, that is a good question. Usually on a line of credit, there is no renewal date, especially at nesto. If you have a line of credit and then we authorize you a limit, you can have it for 25 years. We're not gonna, there's no renewal, basically. You have that limit and then you can just use it when you want. I know that some financial institutions, they have that, it's called, in French, it's called date de rappel. So basically, they want you to go the process again to see if you can still qualify for that limit. And they do that especially, they know that, especially if you are retired or you are like not far from retiring, it's not good, because the way you're going to be qualified is not going to be the same when you are been qualified like a few years ago. So we don't have that product. Our product is, if you get qualified, there's no other qualification if you're not touching your line of credit and not increasing.
Okay, so if I understand correctly, this person has a home equity line, and for some reason that institution, maybe every 3 years or 5 years, or depending at current moment, they want to revalidate, to requalify you all over again, to make sure that you're able to use that line of credit, even if you're not using it. So, but in your case at nesto, you have it, you have it until you decide to close it, which is great. Because I think for a lot of people, it may seem funny, but when I used to do the advice part, and now in my role, I'm less in contact with a lot of clients, but a lot of people that are close to retirement, I told them, go in and get qualified, get that home equity line, even if you don't use it. Go and try to get as much as you can, because maybe one day you want to move houses, or you want to buy something, you want to buy a piece of land, and it's really hard to get qualified when you're no longer working. So maybe 2 years before you leave, you go in, you get qualified, everything is fine, you leave it there, like you said, it doesn't cost you anything, you don't use it, great. You find what you want, you find that piece of land, you find that cottage that you've always wanted, you just write that check, you buy it, when you sell your house, you repay the loan, and we're good to go.
That is a good advice.
Yep.
That's the best way. A lot of people tend to in retirement and say, I don't want to have it. I understand you don't want to pay debt when you're in retirement. I 100% agree with that. But for a lot of people, it's a great way to make sure that they have that flexibility and they can move quickly, because we know the market right now, and my understanding is goes fast, really fast. And if you want to help your kids, maybe you want to help them with a down payment, it's something that can be done. So it's always useful. Other point I want to point out, by having that, we know unfortunately there is a lot of fraud. If you already have a loan on your house, it's really hard for somebody to come in and put a secondary loan on it. So a lot of people, I remember I was talking to the older generation, like, mortgage is done, I need to discharge it. It has to be done. I want to get scot-free, and nobody has a loan on it. True, that's one way of seeing it, but unfortunately, it could open up for somebody to come in, and we've seen it in the past, and take a loan on it. So food for thought.
Yep, absolutely. So if you have a loan that has been paid off, don't discharge it. Just keep it as is. It's good to have it, because we don't know what's going to happen.
So does Nesto do mortgages on commercial properties?
That is a good question, depending what is commercial property is. So let's say that if you have a duplex, and then 20% of that duplex or 25% of that duplex is commercial, it's fine. We can loan you on that. We can do up to 4 unit when it's coming to rental property. But when it's 100% commercial, no, we don't do commercial.
Okay. Does Nesto offer 30-year terms for first-time home buyers?
Of course, like any other financial institution, because the first-time home buyer with CMHC, Canada Guarantee, and Sagen, we have those three partners. We work with them. You can go up to 30% amortization. There's no problem.
Okay. But I have a question for you. You've seen a lot of people now to renew. The big renewal is right now. A lot of people, even if the rates are lower today than they were maybe a year or 2 years ago, they're still higher than what people probably currently have. We've seen people with 1.5, 1.7, like ridiculously low rates. And now they're still going to be like 1 or 1.5% higher, even though the rates are lower. They're still going to be higher than what they used to have. Like, a lot of people tend to take it and pay the mortgage? Do they extend back from a 20-year to a 25-year? Like, what do you see right now? Are people able to absorb the shock, or are they really trying to find ways to keep the same payment?
A lot of people trying to increase their amortization. Let's say that if you had a property 5 years ago, and then you have like 25-year amortization at that moment, and then you have a rate of 1 point something, and then now you paid almost like 5 years on your mortgage, so you have only 20 years left. Because of the rate that you're paying actually is at 1%, your payment is lower. But now, if we're offering you 3% or 4%, it's almost like the double of your mortgage payment. So what we do in that case, we can just increase the amortization. It's not going to change anything on your rate. We can increase it 25-year, okay? Like that, you can have like a small payment. And then you have an option, because amortization is only numbers and papers. If you want to pay your mortgage very fast, you have a lot of tools. You have like the 20% lump sum that you can put on your mortgage right away that is going to pay your principal. You can also increase your mortgage by 20% if you want to do it that way. So a lot of people to answer your question, a lot of people increasing their amortization just to keep up on the mortgage payment.
So one question that I think is very funny, because people are online and they're looking at stuff. I see right now that the mortgage rate for the 5-year is 3.69. Is that the rate that everybody gets?
No, to answer your question, no, because the rate that you have on the website, you have to understand that as a lender is everything is about marketing. So of course, that rate that you have it on the website is always you see there's a condition coming with that rate. Could be that rate is could be insured rate, could be a rate for purchase. So this is why you need to have a conversation with us, and then from what we from your goal, and then the question and the answer that we have, we're going to be able to give you a rate that exactly the rate is the fit for you.
All right. And probably our last question here that we have, because I'm looking at the time, this probably for Shelley and probably for me at the same time. If I receive a property as an estate, so I'm passed away and I'm the beneficiary and I'm getting that property, can I use my TFSA even though I'm getting it for free? So I think that's a very interesting question, because you're not purchasing the house, but you're a first-time home buyer, or I would say a first-time home user. So you probably were living in an apartment, or you didn't have your own property. You're going to go to the notary and you're going to go and notarize that you're actually purchasing that property. So even if you're receiving it as a part of an estate, you could still use your first-time home buyer savings account to use it. And keep in mind that you can use it not just for the down payment, but for anything else. Notary costs, could be for welcome tax, could be for putting a couch, TV, appliances. Like it's great for that. It's not just for one part. I don't know if you want to add to that, but I think that's where it's fun to use the first-time home buyers plan.
Yeah, exactly. And it's really important to also see if it's going to be your principal residence.
Yeah.
Even if you've decided, some people also decide to sell it once it's part of the succession. But it's really important to look at that. Houses are expensive. You know, there are a lot of costs past housing. So it's important to have an investment planning discussion. It's important to have a credit planning discussion, because everyone knows, and I think you've seen it 1,000, not a million times over, you know, there are costs associated with purchasing the house. It's not only the price of the house, it's the taxes that go into it. It's the renovations that you may or may not need. It's, you know, how long is that water heater? You know, if it's going to break, if it's not going to break, you know, that's why it's important to save. And that's why it's important to have those things. And also, again, to speak to the to speak to the advisor, and to have those conversations to see if it's possible.
Well, great. Well, thank you to both of you for participating. I would like to thank everybody that's still with us right now. And on behalf of everybody here at FÉRIQUE, I would like to thank you so much for attending, and we'll see you soon in another webinar. Thank you and have a great day.